Good afternoon, everyone. My name is Stéphane Beauperrin. I am the CEO of FERMA, and I'm delighted to open this webinar on the results of the 9th European Risk Manager Survey that we carried out in partnership with PwC France. This survey has taken place every 2 years since 2002 and provides a unique insight into the views and the roles of the European risk managers. And this year we are very proud because we gathered more than 700 responses from across 29 countries. So my big thanks to Charlotte Edemark, who is our FERMA leader on the project, but also to PwC France, our partner, and the 22 FERMA National Association for their participation. And today I'm very pleased because I have invited 4 very experienced speakers to comment on the results. So we will have Charlotte Edemark, who is Senior Risk Specialist, SAP Denmark, Valentina Paduano, who is ERM Specialist for Prismian Group, Julien Muller, who is Partner Risk Assurance and Advisory Services Director for PwC France, Pascal Prévost, who is Deputy Risk Manager at Nestlé. And before we kick off the discussions, I'm very pleased to give the floor to Françoise Berger, who is Partner Risk Assurance and Advisory Services at PwC France.
Thank you, Charlotte. And PwC is very glad to support FERMA in this survey. And we think it is a major contribution to understand the role and the practices of risk managers in Europe today. It is particularly interesting because of the challenging context of our organizations as they face new and growing risks such as cyber threats, economical uncertainty and security. And the results, as they will be commented today by our guests, show that there is this evolution of the risk manager practices is linked and clearly linked to the evolution of the second line of defense as a whole. So I let the floor to our guest and Julien to comment to you the results and answer the questions that you will ask through the solution. Thank you.
Tiffaine, Françoise, thank you for this introduction. So we will comment the results of the survey with you, Charlotte, Pascal, and Valentina. Thank you. So we will not go into details into all the data of this survey because we had more than 60 questions and we have more than 700 respondents. So we'll focus on some specific topics and key takeaways from this survey for today. So we will discuss about the risk conductor and we will explain what is the role of the risk manager today. Then we'll discuss about the top risk seen by the risk manager today. Then we'll discuss about the insurance management practices. And at the end, we will also draw the profile of the European risk manager. And do not hesitate to ask questions at the end of the conversation. We will take time to answer your questions. So first of all, the risk conductor. So this year we asked to the risk managers what is the impact of the development of the other risk-related functions from the second line of defense, such as IT, cybersecurity functions, or CSR departments, or compliance departments. And 65% of risk managers say that they are becoming the risk conductor. So the one in the company with coordinating risk management work and with consolidating data and giving a clear and comprehensive view to the top management around their risk.
So Valentina, how do you interact with the management and the board in your company?
Thanks, Charlotte. The interaction with the management, with the business and line management in my company is on a daily basis, usually to analyze the topics that we identify during the risk identification phase under the ERM process. but I'm also involved by my colleagues in a specific project that required a risk-based approach to, for example, to reinforce and improve a particular business process. Regarding the board of directors, according to Prismia Risk Governance Structure, I met on a quarterly basis the Risk and Control Committee that is composed by independent members of the board itself. The aim of these meetings is to inform the members about the risk management activities, focusing, of course, on critical situations, if any, and on the related mitigation strategies that we take to prevent or mitigate again this risk exposure. At this meeting, the line and business management is often invited to attend because they are the owner of the risks. So the management, the board asks to the management to provide their confidence and the expectation mainly on the actions that has agreed to take and to mitigate the risk exposure. Finally, we met the board of directors directly on at least once per year to discuss with them the high relevant topics and proposed improvement where needed that require the members' approval.
And if I may, Charlotte, we have mapped this year the interactions and the relationship between risk manager and other functions within the company. And what we see this year is that there's a lot of functions that are in the first prong partners of the relationship with the risk manager. And for example, IT are in the middle of the radar this year. In 2016, they were not considered as a first-rank partner for the risk manager. So very an increasing role of the risk manager as a partner of every function in the company, the first line and second line of defense.
Yeah. And Pascal, in your organization, do you also see interactions with other functions, maybe internal audit or other functions?
Yeah, in our team, we look after the management of or the treatment of insurable risks, whether it's the financing or the mitigation of risks. Enterprise risk management is handled in another team. And just to complement what you're saying, I think as far as Nestlé is concerned, I think it would be kind of bold to say that the ERM team is really influencing the strategy of our group. I think that at least we can mention that the ERM team can act as a whistleblower to actually make the board aware of some new risks or development of existing risks. I think the key challenge is for intangible risks like economic or political instability or new emerging consumer behaviors. And I think that provided there would be more sophisticated tools that would enable to quantify or model these strategic risks, the risk manager will have actually play a more active role in defining the strategy of the company together with the board of directors. But coming back to your question, Charlotte, actually what we've seen over time is that we have been developing more and more contact points, multiplication of contact points with actors belonging to the three lines of defense within the company. Where traditionally we're already in contact with supply chain for goods on transit or operations and engineers for property loss prevention. But now more and more we're also in contact with ITIS security for cyber risks, HR for insured employee benefits. We also have contacts with numerous other operations because of these new emerging risks. I should also mention that business continuity management is integrated in our team for several years. So you cannot really say that the risk management function at Nestlé is isolated on an island in the middle of Lake Geneva.
Okay. And this role as a risk conductor of the risk manager is really key to help the company and the top management of the company to tackle the risk that are facing the company. But before that, maybe we can discuss about risk management and strategy and innovation, because the risk manager is also playing an increasing role in front of the strategy. So in fact, we have 76% of the risk manager who assess risk that could affect the relevance and viability of their organization strategy and objectives. And we also have 47% of risk managers who assess risk related to the different strategies considered by the organization during its strategy definition. Another key things for the risk manager is the fact that they're also playing an emerging role in front of new technologies adopted by their company. And we can see that 37% of risk managers identify and assess risk prior to adoption of new technologies by their own companies. And that's also 36% of them identify and assess emerging technologies already used by the business. But moreover, the risk managers, to perform its own activities, is also using new technologies. And for example, we have 44% of risk managers who are already using data analytics tool to help understand the data coming from the company or from external sources, to better understand the risk and to being able to help make decisions by the business.
Yeah, and there's no doubt that the use of new technologies is also important for us in our company. We are a cloud company, and we actually have to make sure that the risk we assess, we also use these new technologies and see the technologies used by our customers. But when in your position, how do you use innovative techniques in your work?
Yeah, Prismian 4 years ago, more or less, adopted, implemented the SIS EGRC tool, mainly focused for management of risk assessment process applicable to our Turkey project, energy and voltage Turkey project. Why? Because during these activities we collect a number of data, so a tool is really useful to manage this quantity of data. So I think that this web is a web tool, and this web tool help us firstly to have a greater reliability and completeness of collected data, because we started using an Excel file, and of course the risk to have mistakes and errors is very high. So the first benefit is a simple benefit related to the reliability of data. But referring also to what Pascal said before, I think that these tools grant also the opportunity to create value for the business, because now we are able to perform more sophisticated analysis, such as we are able to apply a Monte Carlo analysis. So we are trying to evaluate, provide to the management a predicted analysis on which evaluate the trend of our business, and to use this information, these results on our decision-making process. So each investment, each project can be evaluated considering these more sophisticated and predictive results.
For you, Pascal, are you also experiencing the use of new technologies in your work?
Yeah, absolutely. I think we use technology in our work at least in two ways. The first one is that we really believe that reliable data is really important to ensure an adequate assessment of risks. And what we've been working on is trying to automate as much as possible the collection of data and reduce errors related to the use of Excel spreadsheets. So currently working on a project which is basically a platform hosted with a service provider, where we will collect data related to property, sums insured, premiums, claims, and this information and policies. And this information will be shared together with the insurer, the corporate risk management team, and also the local subsidiaries. So this is what we do in a first step. We are also use new technologies to help operations mitigate risks. And as an example, some of these loss prevention initiatives funded by our reinsurance captive include e-learning tools for supply chain risks or travel risks, telematics for road safety. We have also tracking devices for containers of raw materials and finished products. I should also mention we're working on a 3D interactive tool which will help promote property loss prevention. And then this would include guidelines, standards, and also a number of games, because this is also a fun way of learning.
Pascal, I don't know if you agree, but I think also that this web tool allows us to improve the transparency of the data around the group, because the data are available to a wider number of employees. So also the reporting that you can perform thanks to the web tool is an instrument to improve the transparency of the data, the information about the risk.
Yeah, and visualize also the key risks to our senior management. Yeah.
Exactly.
Yeah, and the efficacy of your loss prevention initiatives, because it's also interesting to track the impact of these loss prevention initiatives.
And so those tools and techniques that you are using to identify and assess risk, and the position you have in your organization to help you to have a clear view on the risks that companies are facing. And this year, we've asked to risk manager what are the top 3 risks for their companies. And so this year, the top 5 risks we've decided to present is cyber threats as a first position. And then you also have uncertain economic growth and geopolitical uncertainty, over-regulation, or, for example, changing consumer behavior as top risks in this year. And compared to the last survey performed in 2016, we see evolutions. For example, cyber threats were not in the top 5 risk in 2016, and now is it at the first rank this year, so quite an increase in 2 years. We also see changing consumer behaviors who integrate the top 5 and who were not in the top 5 risk in 2016. Uncertain economic growth and geopolitical uncertainty were already concerned for risk managers in 2016 and stay important topics this year.
Valentina, what do you see of emerging risks from your perspective?
Yeah, consider that I think that all these top risks highlighted in this survey are relevant for a multinational group like Prysmian. But I think that the geopolitical uncertainty is currently a hot topic for Prysmian for 2 reasons. Firstly, because Prysmian has recently closed an important acquisition of General Cable, an operation that allows us to extend and reinforce our business operation mainly in the US market. US market is a market where we are observing a politics oriented to nationalism. Think about duties imposed to Mexico, sanctions to Iran, and so on. So in this scenario, Prysmian may review the business model operating in that countries. Therefore, Prysmian has recently declared that any trades with countries, individuals, or entities in Iran, Sudan, Crimean region, Cuba, and so on are prohibited. The uncertainty, then we cannot forget the European situation, instability that after the Brexit has been compromised, I think. So the uncertainty of the national government of the state members could affect the strategy implementation of a group like Prysmian that operates in these countries. So I think that the geopolitical uncertainty is still a hot topic for us.
Valentina, I think that the risk you mentioned specifically for your group, I mean, they also risk that Nestle is faced with, as a consumer goods company with a global footprint, with factories in 85 countries and products sold in 189 countries. I mean, obviously, we are all faced with these risks, and also with the risks that are identified through your survey. Mm-hmm. Now, I mean, to some extent, we benefit from a diversification, between products, brands, and countries, but obviously these risks have to be managed actively. I would mention that maybe there's one risk which is not mentioned on your radar, which is the financial instability and the poor performance of government bonds, and this would have a potential significant impact on organizations who provide retirement benefits to their employees, specifically on a defined benefits basis.
That's the same for our company. This risk radar is very much in line with the view that we have on the key risks. And we actually are delivering now our services in the cloud. So the whole the risk scenarios relating to cyber and security risk is very high on our agenda as well.
Okay. So thank you for the thought. And the risk manager in front of this risk to help its company is developing and setting in place some risk management strategies. And in this risk management strategy, we have insurance management. And in this survey, we have quite interesting also data around the insurance management practices and the market trends for insurance. So this year, we asked the question about what are the expected changes to your insurance program as a result to current financial and economical climate. So the risk manager and especially insurance manager say that they will negotiate long-term agreements or rollover of their insurance program. They will also strengthen their loss prevention activity and modify their insurance buying pattern. What does it mean is that they will modify the way they buy insurance cover using data, external data, internal data, using consultancy firm to help them to buy the insurance covers. Another key data from this survey is the fact that 85% of the insurance managers are extremely concerned by the limits and exclusion of emerging or specific risk, and 80% of them are concerned about the new insurance-related regulations. And in front of this climate and context, the risk manager say that they will use mainly risk retention strategies. So 67% of them say they will use risk retention strategies to being able to cover emerging risk for the company, and almost 50% of them say they will try to lobby the insurance market to help them to develop new solutions more adapted to the needs of the insurance managers. And finally, also the use of captive. So it's also an interesting strategy for the risk manager to being able to insure some of the emerging risks that the company is facing. And what we see is that 38% of respondents are using a captive. It's increasing since 2016, where we had 34% of respondents, and 58% of them are using a third-party provider to manage this captive. And the interesting fact about that is that the risk manager say that they will use their captive to insure non-traditional risk, non-traditional lines of cover, and 56% of them say that the captive will play a more important role to insure those risks.
So Pascal, I have two questions for you. First of all, what is your perception of the insurance market trends that we have seen here?
Okay, what we're trying to do is to closely monitor the evolution of the insurance markets. Although actually we kind of protected because of the involvement of our reinsurance captive, who in a way contributes to the stability of the total cost of insurable risk of our organization. Now, what we believe now is that following this succession of large insured natural catastrophes, and the property rates cannot remain low forever. Secondly, we are witnessing a consolidation of the insurance market, which will generate a reduced capacity, and the buying power is actually shifting towards insurers. So as an example, where when we're renewing our excess property and liability programs, we try to negotiate LTAs for 3 or 4 years, then just to stabilize the arrangements for the near future.
And in your captive, can you elaborate a little bit more about your strategy on insuring non-traditional risks?
Sure. So our captive is already 20 years old and has been traditionally has been involved with a number of lines of business which are considered as non-traditional. So beyond the property, liability, and motor, we also reinsure insured employee benefits, life and disability, expat medical, business travel, construction, workers' compensation. Now, having said that, what we are doing at the moment is reviewing the performance of our portfolio of risks and to see whether we can optimize the use of the capital of our captive. Now, looking forward, we're looking at other non-traditional lines of business like local medical or cyber risks, and this will be considered in the future, but this is provided we have a better understanding of our risk exposures.
Thank you.
If can I add my comment also?
Yes, please. Certainly.
I think that to follow this insurance market trend, I think that for the future it will be useful ensure or demonstrate to the insurance market that there is a good capacity, that the company has the ability to follow, to maintain the focus on the risk management, on the main risk topics. Because I think that, for example, thinking to the cyber risk, I think that to find a good response from the insurance market can be able only if the insurance market perceives that the company has a good control on this kind of risk. So I think that we ensure a link between the enterprise risk management process and the people that work on insurance point of view. So I think that this is a good example to support and sustain this trend in the futures.
Yeah, absolutely. And we see that with the use of new technologies by risk managers to being able to collect the data and to share the data more easily, it's also an important way to address those new risks, because the insurer will need data to really understand the risk and to being able to assess the risk exposure for him. So we see that it's very interrelated to the other topics that we have seen before.
I would like to add that I think it's key to understand your exposures and then to collect relevant data. I would like to bounce back on one other point which came out of the survey, is the investments in loss prevention. And it surprisingly looks as if the number of respondents, there are going to be less respondents saying they're going to invest in loss prevention compared with 2 years ago. And this is rather surprising, I think, moving down from 54% down to 44%.
Yeah.
I mean, this is actually not the way we're looking at it. I think that because of the strengthening of the insurance market, I mean, it's really key to invest in loss prevention. And as a matter of fact, next year we're going to invest even more in loss prevention than we did in 2018. Yeah. So, and I think that's a message to keep in mind, because you have to keep a good level of risk management, and considering that the appetite of the insurance market is going to reduce going forward.
But even if the figures have changed since 2016, it's still the second one in the top changes expected by the insurance manager. So still interesting. So we now better understand the role of the risk manager and the techniques you are using to address the risk. We also have seen the risk that your companies are facing today. So now maybe to draw the profile of the risk manager, so you. So what we observed in this survey this year is that we have 31% of women amongst the risk manager, and so 69% of men. These figures has increased. The percentage of women among the profession has increased since 2016 with 4 more points for women. Also, the risk manager is still an experienced professional. We see that 55% of risk manager have more than 10 years of experience in risk management, and that I think it's 70% of respondents who have between 36 and 55 years old. So, still experienced profile for risk managers, and so. This year, the panel represented is that the risk manager is coming from many industrial sectors, with 55% of respondents from industrial sectors, and then financial services with 23% of them. But they're mainly coming from large companies, so 81% of respondents are coming from large company, and from listed company, 50% of them are coming from listed company, and 32% from privately held company. Another interesting fact maybe about the European risk manager is that 84% of them are working at the corporate level of their organization. Among the activities of the risk manager, as we have seen with you, risk manager, it's not one profession, one unique profession. You have different activities. So we say that more than 30% are mainly focusing on ERM, so mainly global risk management, and 28% of risk manager are mainly focusing on insurance management practices, and the rest of them are performing both activities, insurance management and global risk management activities. Maybe comment on those figures?
On those figures, well, maybe about this feminization of the profession. Is this because we saw the gender and age division previously? Valentina, do you see any increase in that trend?
Yes, I do. Even if this number is very low, in my opinion, considering the European market. But last year, HARRA, that is the Italian Association of Risk Managers, conducted a survey to analyze the role of female in Italian industry and in particular in risk management. The result of this survey shows that even if the 37% of the Italian risk managers are Italian, are female, so it's a quite a high number of, compared to the European market, so I think this is good news. But the gender gap has been confirmed. Consider that the contractual status of female risk managers is a medium-low status compared with the men risk managers that are positioned in a medium-high level in the organization. Even that, I think that the results shows also that the attitude typical of a woman, such as the ability to manage the complexity or to plan and organize the activity and to listen each other, are recognized as attitude typical, necessary for successful risk managers. So I believe that we are in a positive trend. We let the women to achieve a high-level position in the organization, of course, accordingly to their skills and competencies. And I think also that this topic could open additional discussion about how the companies and the society in general face up to the work-life balance. That I think that is one of the drivers for the woman to force to sustain its career, her career. Yeah. So
and maybe Valentina, just to complete the fact that in the results we observe that in the younger age, so less than 35 years old, the gender balance between men and women is quite different. As for younger risk management professional, it's quite 50-50 between male and women.
And I think maybe also for the there was a slide also with the certification, because I think there's 8% which acknowledge the importance of a professional certification, and now with the REMAP certification, which is an independent confirmation, you could say, of our professional skills and experience. I think this is also an important trend, because it brings us a value as risk managers, because it gives us a common reference when we address risks and insurance topics with our peers, with our let's say senior executives, but also among ourselves. And I don't know, Pascal, do you have any view or any experience with the REMAP certification?
Well, yes, I have some experience with the REMAP certification, but sometimes risk management is considered as an art, and I think that having a professional certification certainly has to be recognized internally. Yes, certainly.
Yeah, and we said that 80% of risk managers say that certification matters in practicing risk management. And if we look at the qualification of the risk managers today, almost 60% of them have a specific qualification in risk or insurance management. coming from university or business school, or even association, National Risk Management Association, who are providing training sessions also for risk manager. So yeah, it's quite a huge trend from the risk manager.
Yes, I think also that a certification recognized at European level at least is important also to qualify in general our role within a number of other roles and activities within the companies. So it's a good opportunity for us to have the same certifications compared one with each other. So it's a good opportunity.
Yeah, it's also helps to have a common language, you know, when we
Exactly.
actually doing some benchmarks between risk managers from various countries, you know, and organizations.
Absolutely.
So I see that we have some questions from the audience. So maybe if you're willing to answer to them. We have a first question about how risk analysis is integrated into specific decisions, and how the outcomes of risk analysis change the nature of the decision taken by the management. It's linked to the role of the risk manager and the strategy. You know,
In our company, it's used as the risk analysis, at least as in my function as operational risk manager. It's used for the management team to be able to make decisions on the daily deals and operations that we are performing. So we have a specific process on when to have risk assessments on our opportunities or implementation projects or other activities.
Valentina, do you have any comment?
Yes, this is an important point in our enterprise risk management process. Consider that our ERM starts from the approval of the business plan. So once the strategies have been defined, we evaluate the potential events that could affect the achievement of defined targets. And on a yearly basis, we review these targets in order to take into account the best and worst scenarios that we identified in order to understand the way to easily achieve these targets. Then consider also that any strategic investments are evaluated also considering the potential risk assessment. So strategic investments like, for example, a merger and acquisition operation or a construction of a new cable laying vessel, as Prismian has recently declared. We perform for this investment a detailed risk assessment. So, and the results of the risk assessment as taken into account to evaluate the approval or rejection of the investment. So yes, it's a very important point in our important step in our process.
Okay. Yeah, thank you. Yeah. I will mix some of the questions because we will not have enough time to answer to all of your questions. So sorry for that. But maybe Pascal, we have some questions around insurance markets. Do you think that the appetite of insurers is reducing, and how does the risk manager act in front of this maybe reducing of risk manager of insurance appetite?
Well, I think that insurers are always interested to write good risks. Mm-hmm. So I think that for those who have good risks, they should continue to have preferred conditions. Although, I mean, it's all a matter of price. You know, it's a market with a supply and demand, and then I think that prices are likely to go up. Now, if for those who don't have good risk or cannot demonstrate that they manage their risk properly, I think there would be a big focus on loss prevention. So this is where I think that, as I said previously, risk managers should spend more time to actually identify properly their exposures and identify where they should concentrate their efforts to and develop relevant loss prevention initiatives.
Okay. Another question, maybe. It's about innovation, and we have one question around the blockchain and how is risk management prepared to take on blockchain. And maybe from my experience, we mainly see blockchain, would say, experience on more financial services company, even if some industry company in the energy sector is trying to use blockchain. But and it's mainly on the business part. I do not have any experience around risk manager who are using blockchain. I don't know if you have.
Yeah, we've been working on a pilot with a number of insurers, and actually, unfortunately, we came to the conclusion that the way we handle our risk management programs doesn't actually fit with blockchain. I mean, there are other solutions we're working on. Now, as far as our corporation is concerned, I mean, the blockchain solutions are certainly being worked on, but they're not involved necessarily the risk manager.
Yes, I think that the insurance market is more interested to the blockchain opportunity. From our industry point of view, I don't see yet particular opportunities, or maybe we are so far from to implement this kind of evolution. But the trend is very fast, so maybe in the next future.
Yeah, I think it's driven by the insurance companies together with technology providers, and which would actually like to see some of the industries actually entering into partnership with them.
Okay.
So it's coming.
So you are not yet using smart contracts to ensure some risk like the climate change and stuff like that.
No.
Yeah, okay. Maybe last question, and then you will have to conclude. How do you see the recent development of COSO ERM and ISO 31000? This is not the question we asked to the risk manager in this survey, but maybe you have something to say about the importance of the standards in your role and your techniques. Do you use any standards? Do you think that it's important for the risk manager to have a common and standardized approach on those topics?
I think as a global company, it's important to have a standard and have this as a backbone for the framework which you establish when you establish the governance, risk and compliance framework within your company. So it enables to speak, have a common language and have a common methodology around in a global company. So at least for global companies, I think it's very important.
Yes, I fully agree with you, Charlotte, because our enterprise risk management process is fully defined in agreement with the COSO ERM, and I think that is really important because it grants a recognition around the world of our methodologies, so it's really important. There is not only a COSO ERM, we have also national regulations that, but the standards are very quite similar, so I think that these standards are also a good opportunity to develop the framework and the methodologies. So I think that each companies have to know this standard and have to try to implement this standard, customizing, of course, the requirements to each company.
I think it's good to have a global framework which is common to all these large organizations. But once again, I mean, it would be very important to have the tools to enable to actually carry out these risk management activities going forward.
So thank you for that. It's all for the question. At least I just want to indicate, because we have a lot of questions around the fact that the presentation will be available and the replay will be available. So yes, I confirm that the presentation and the replay will be available on the website. So to conclude, maybe Charlotte.
Yeah, I think the amount and the statistics speaks for itself, but I think having 53% of the risk managers saying that the internal recognition of their function is increasing, I think that is a very important finding, and it also relates to this fact that we are maybe considered as risk conductors, because you have to be very active in all around in let's say all lines of business and at all levels in your company. So it's definitely a recognition, and it shows how important it is for our profession, and we can having this function be able to implement a sound risk culture in our organizations. But in conclusion, I would really like to thank you, Valentina and Pascal, from your contributions and your experience here today. I also like to thank the team from PwC and from FERMA to organize this seminar. And in the end, I will also confirm that the webinar will be available, the PowerPoints will be available, but last but not least, the final report, where you can dig into all the results, will be published on December 15th. Thank you.
Thank you.
Thank you.